Thank you, Jerry, and thank you also to Vertical Events for allowing me to give this presentation here today. I suppose the main focus of my talk is it will be looking at resource evaluation. I promise it won't be technical. It's aimed at the investors in the audience, who mostly, I think from talking to people yesterday, don't have a massive understanding of geology terminology or mine engineering terminology. So I'll tailor my presentation around that. I really do want to focus in on some of the just general areas that we as consultant geologists and mining engineers focus in on to quickly find out if there are issues in projects, and hopefully it can steer some of you in the right direction also. Any evaluation really it's just an assessment. Sometimes it can be a very quick, high-level assessment of a project. Sometimes we spend a long time peeling off the layers of information in a resource project. And when I talk about a resource project today, I'm not talking about oil and gas. I'm really going to focus on mineral exploration and mining project evaluation. The investors out there's a plethora of you guys and gals. We have the amateurs, we have the professionals, we have investors who are out there in industry who are looking at big projects. We've got mining companies who are looking to acquire bigger projects and buy into projects. So it's quite a busy space. And a lot of data is being assessed at the various different levels. And I suppose what I'm really just trying to focus on my presentation here on this slide is that there's probably a little dividing line with the amount of information that's out there that people make their decisions around. Sometimes it can only take a few minutes. People sit down, they I suppose let their sentiment and what's coming out in the news guide them as to where they should be putting their money. And of course, there are the broker reports and other things that we can use. At the upper level, and I suppose it's an area where we play as consultants, we do deal a lot with the technical data around projects, the geology, the mineral resource estimation, feasibility studies, and there's a hell of a lot of data normally to be processed. And sometimes we are asked to focus on these things pretty quickly. We might only have a few weeks to go through the data for the projects that we're looking at. Other times, and recently, we worked with a fairly major company to sift through a lot of data. They were ready to make a fairly serious acquisition. And what they wanted to do is take all the data belonging to the company they wanted to buy or the mining company they wanted to look at. And they pretty much asked us to start at the beginning again with all the drill hole data, all the assay data, all the structural geological data that we were given. It's not that they didn't trust the information that was being handed by the company, but they wanted a serious second opinion. But it's not always that way. As I say, normally we're put under a fair bit of pressure. We do launch into this technical data area pretty quickly, and I'm hoping to guide some of the investors out there into areas that maybe you can quickly look at to see whether a project has got legs or not. One thing I think that people need to focus on is, I know there's a lot of exploration projects in the hall here today, but there's a serious amount of phases that a project has got to go through to get it to the operational stage. And I just want to introduce some terminologies here: PFS, FS, DFS. We throw them around like confetti. And sometimes people come up to me and they say, well, what is a PS or a PFS? What does that actually mean? Well, at the very beginning, we are looking at the exploration phases. As we start to develop a deposit, be it gold, copper, cobalt, whatever, people start to do a bit of head scratching and say, okay, we think we've got something of economic interest here. Where should we be going with it at a study level? How do we take it along and start de-risking these projects and these deposits that we're trying to develop? Well, a couple of the early stage studies that we talk about are concept and scoping. At scoping level, we're starting to know a lot about the deposit, the depth of it, the grades, etc., of the material that we're looking at or the commodity that we're looking at, and we're starting to put some options around that. Maybe it should be an underground mine to work this, what type of infrastructure is needed around it. And then we start pushing into areas, if you're getting positive results at this stage, into PFS, which means pre-feasibility study. FS is a feasibility study where we're really starting to push in and look at the economic viability of the project. And once we've got a lot of confidence up there, we start looking at the definitive feasibility study level, or the DFS. And really what we're doing at all these stages is de-risking the project and looking and putting in more data and developing the project as it goes along to an operation stage. Within the resource evaluation side of things, what we're all trying to do, everybody here that's got a project, is to bring down the risk levels and up the value. That's what we're all about, really, when we're putting our geological and engineering smarts into projects. When we look at a project, we use some very, very simple techniques when we first look at it. The simplest one of all is a SWOT analysis, looking at the strengths, the weaknesses, opportunities, and threats or risks. Now, I put threats or risks in there in red because when we're evaluating a project, you can spend a lot of time focusing on the strengths, weaknesses, and opportunities, but it probably doesn't get you too far to the actual value of the project. And with threats and risks, I suppose, what we're trying to do is find out where do we go quickly to figure out where this project might have a lot of risk, or where the work may not have been done properly. And what happens in this area is we start looking at fatal flaws. And a fatal flaw to me it really is the project killer. It's the one that it gives you the bullet right between the eyes when you least expect it. A fatal flaw in many projects may not even revolve around poor geology or poor geological understanding. It can be to do with environmental issues. People may have not got the proper permits in place for the project to progress. One fatal flaw recently that we came across in a project in Asia was where the company had done millions and millions of dollars worth of drilling, but they were using an unaccredited lab. And when we looked at the lab results, we did some umpire sampling, and we pushed it across to an Australian lab here. We found that the assay results in the lab that was being used in Asia was a complete farce, and it actually killed the project stone dead. So these are some of the things that you have to be aware of when you're looking at project. But there's even a further detail that we look at when we're looking at the value of a project. And a lot of it is to do around where the exploration and the resource estimation work is happening. I'll just maybe bring you back here to the study levels I mentioned a little while ago, a couple of slides back, in the scoping study, the PFS, pre-feasibility study phases. It's around here in the exploration and the resource work that is happening that a lot of data is being collected. It's initial exploration. If this data isn't being collected correctly, it actually has a huge domino and knock-on effect when it comes to predicting and making economic assessments down the line. And I suppose this is an area where I want you maybe to focus a little bit on. The basic foundations for me when I'm out there looking at a project is what way does the geology look, how has the work been done, and the mineral resource estimation. And so much of it happens around this initial exploration phase. Really what underpins any project's value, we've all looked at feasibility studies. There's some projects in the hall here today that have feasibility study work done, and they're starting to advance and progress. And as you look down the main project value chain, you start to pick up things like the annual revenue. You'll be looking at the types of metal product that needs to be produced, what type of pricing is there. But as you drill down even more, you'll hear people talking about tonnages, the recovered grade, and really, really importantly, if you look at the foundation here, it's all about volumes, densities, in situ grade, and the recovery ratios. And really what all that boils down to, you look at it in its simplest basic detail, is the geology and the mineral resource estimation work that's been done on the project. So that's where we focus our attention at most times when we start these evaluation projects. What is underpinning the value of the project really is good geology and mineral resource estimation work. It really does boil down to this. Wrong geology, rubbish resource, and a fantasy MPV. So if the rest is right, it'll all fall into place. And what I would ask you, maybe as you look at projects at any stage as an investor, would be just look at resource estimates. When we look at a lot of resource estimates, you know, we're looking at volumes, we're looking at grade, but what a lot of people forget about is density. And this is an area of projects that we find that we get a lot of fatal flaws around density measurements, people not doing the work correctly, and that can lead on to, you know, when you start multiplying these things out, if the densities are incorrect, if they've been pushed in too high into a resource estimate, well, then that can lead to massively high tonnages, and it can wreck the economics of a project. So again, just be aware that these things are worth having a quick look at when you're making some decisions. Where do we look for this? Well, thankfully here in Australia, we do have the JAR code. It provides an excellent starting point for any investor who needs to quickly home in on data and information without having to spend hours and hours and hours of looking around where to find other information. In the JAR code, you know, there is a requirement for every publicly listed company in the minerals and exploration side here in Australia to produce a Table 1. And in Table 1, you've got a checklist or reference criteria for pretty much everything that the competent person, be it the geologist or the resource estimation competent person, has to detail. So that's an area where you should really push in and have a closer look. Just to summarize what I've been saying, really, the basic steps that we all use and look at in the project evaluation phase is looking at the exploration and mining side. The quality of work is absolutely essential. Generating an understanding of these two aspects of a mineral resource project can really lead to a very, very solid project, and the potential for success there would be, I would say, guaranteed once the hard work and hard yards is done at the early exploration stage. And any mineral resource really worth its salt that's put a solid geological interpretation behind it will really lead to top-class mining studies. That's pretty much what I'd like to take away from my presentation. My company, CSA Global, we do a lot of this type of work. In particular, I've got my colleague here today, Graham Jeffers, who does a lot of work on the due diligence and the, I suppose, evaluation phase. And please feel free to have a chat to us and talk to us as we go around. And we'd be happy to dig in a little bit deeper on the technical stuff if you need to know any more. Thank you, Jerry.
Thank you, Patrick.